Good afternoon, good morning, everyone. Let us wait a few more moments for everyone to log in and we will start. Once again, good afternoon, good morning. Welcome to ERM webinar, Beyond COP26, the hard truth, the essential business shifts. It's a very timely event and dedicated to a truly hot topic. Today we will talk about the outcomes of the recently completed Climate Change Conference, or COP26. We'll talk about the recent updates and commitments from countries, financial sector, businesses, and what it all can mean for us in the Asian Pacific region. My name is Yulia Dobralubova. I'm a partner at ERM, based in Bangkok office, and also leading corporate sustainability and climate change services for Southeast Asia. Before we start, let me explain you some housekeeping rules for today. First of all, we encourage your active participation throughout the session. All the participants will be muted, but you are very welcome to post your questions throughout the session in the Q&A function at the bottom of your screen. And then we will discuss all the questions at the end of the webinar. Secondly, our webinar today will be recorded. However, the recording will be mostly for ERM internal purposes. Nevertheless, we will share the materials from today with you after the webinar. Next, we have today enabled the English transcript feature for your convenience, so you can simply click on the live transcript button at the bottom of your screen and select Show Subtitle. Lastly, we also welcome your feedback that would help us improve going forward for next events. And at the end of today's webinar, when you log off, there will be a short survey which we welcome you to complete. Thank you, and let's move on to the next slide. I'm delighted to present to you today our distinguished panel. We have our thought leaders around climate and sustainability with us today, coming from Global ERM team and our regional team. And I would like to give special thanks to Lyndon and James, who joined us very early in the morning today, as they are based in Europe. Let's start with Lyndon and Joe, who will be talking today about COP26 updates. Lyndon is ERM's Global Sustainability Director and a leader of the ERM Foundation. She leads strategic relationships with key international organizations, including United Nations, GRI, and the World Business Council for Sustainable Development. Lyndon has been following up closely the COP process and was just recently in Glasgow at COP26. Then, after Lyndon, we will hear from James Stacey, who is ERM's Global Director for Low Carbon Economy Transition Services. James will talk about financial sector perspective. The last but not the least, Robin Kenish, who is based at ERM Hong Kong and is Corporate Sustainability and Climate Change Partner for ERM in Asia Pacific, will talk about key implications from COP26 and the key global climate updates on organizations and businesses in the Asia Pacific. And before we start the presentation, we would also like to hear from you which sectors you represent today, as well as what are your initial impressions from the COP26. In front of you, you will see a pop-up window with 2 questions. And please don't hesitate to scroll down to answer both of them. The first question is about your sector. And the second question, what is your take on COP26? With answers ranging from a great success, not on track on meeting 1.5 degree target, but with significant implications for business, not achieve what it needs to, or I don't know. And let's wait a few moments to see the results. All right, let's see what the results are. So the majority of our participants today are coming from the oil and gas, financial sector, mining and metals, power. Actually, we have quite a diverse representation today, and also a lot are coming from other sectors. And in terms of the results of the second question, what's your take on COP26? Interestingly, the majority of today's participants think that we're on track on 1.5-degree target, but with significant implications, followed by not achieve what it needs to. And about 1/4 of participants still don't know about the COP26, and we would be happy to present it to you today. Lastly, before we start our presentation, and for those of you who do not know ERM yet, so ERM is a global sustainability consultancy firm. We've been working closely with our clients across different regions and different sectors for the last 50 years. This year, we actually celebrate our big anniversary. And to commemorate that, we have also taken our ambitious net zero target for addressing our carbon emissions across operations by 2025. And with that, let me welcome Lyndon Edgell, who will start our session today. Lyndon, you were there in Glasgow during COP26, closely following negotiations and updates from countries, as well as side event agenda. What were the main expectations from COP, and what do you think COP was able to achieve and what not? What are your overall impressions?
Yes, thank you, Julia, and good afternoon, good evening, good morning to folks on the call. Thank you for joining us. So let's probably just start with some of the language that is used. COP stands for Conference of the Parties. So this is an official UN process that has been going for a number of years, COP26 being the 26th meeting around this. And so I think we need to remember that across the decades, this very formal process of the United Nations has been looking to address climate change. You are all familiar with the Paris COP, COP21, which agreed for a very monumental agreement that we would all aim as the countries of the world to keep global warming or climate change below 2 degrees and with an ambition for 1.5 degrees. So that was really what was set up in Paris. And in Paris, they said in 5 years' time, and now we lost a year because of the pandemic, we would come back and we would raise ambition. And so this COP was really about the countries of the world through their country plans, known as the NDCs, coming back to raise ambition. So that was the main task of Glasgow. Alongside of that, it also had the task to really look at the financing side of this. There were promises made over a decade ago by many of the wealthier economies of the world to provide finance to help the transition. You might be familiar with the term of the $100 billion a year that was promised. And there was also a requirement to close out what they call the Paris Rule Book. And this is the rules, the mechanisms, the trading framework by which we actually institute the rules around climate change and carbon trading. So they were sort of the tasks of COP26. In addition, the UK, which is known as the president of COP, coined the term coal, cash, cars, and trees. So it set out a number of other agendas that we wanted to meet in Glasgow. Now, on the screen there, you can see a quote from the Secretary General of the United Nations, who at the end of the process in Glasgow recognised that important steps were made and that the goal towards 1.5 degrees was kept alive, was the phrase, but that we have so much more to do. And I think that's probably the balancing message coming from COP26. Yes, a lot was achieved, but there is a lot more to do. So, you know, are we on track to achieve the 1.5 degrees? Midway through COP26, Climate Action Tracker, which is probably recognised as the tool to best understand how the commitments are moving forward, Climate Action Tracker came out with this analysis, which was, if we just do the policies and actions that have been stated, it'll come somewhere around the 2.7 degree mark. If we take into account the targets for 2030, so the near-term targets, which are incredibly important for us to meet the targets of Paris, then it might be 2.4. If we add in pledges and targets, we might get to 2.1. And if we put it all together and we deliver on everything that was promised, we're heading towards 1.8. So you can see that big step forwards are being made, but we still have that delta. And the science is telling us we're probably sitting at around 1.2 degrees warming already in 2021. So this is really important to keep in mind in terms of the steps taken. So in terms of the formal United Nations negotiations, what came out of it, the Glasgow Climate Pact? Well, there was a lot of consternation from many countries of the world that the $100 billion, this climate financing package, was not delivered again. However, there were strong signals delivered about financing that would come across and plans to increase the level of finance going forward. You may have seen a lot of consternation on the last day around the particular phrasing around coal, and would it be phasing down or phasing out coal? We can debate whether that actually materially matters, the phasing down or phasing out, but I think the fact that coal was even mentioned in the final text is very significant. Adaptation, which is a recognition that we are already, and many countries of the world are already being impacted by changing climates through some extreme weather events and so on. Recognition that funds need to flow now to help countries address that. Loss and damage is maybe another term that people use, is sort of compensation from wealthier nations that have used fossil fuels to develop their economy over the last few hundred years, recognizing that countries that are now emerging may not have that same opportunity. How is that compensation? And that's a very loaded word in the climate negotiations, but there was mention. There's also explicit reference to nature, biodiversity, and oceans, and a recognition of the role of non-state actors. And again, in UN language, non-state actors are everybody else other than the countries. And so I think, again, it's important in the UN system that they recognise the role of business, the role of civil society, the role of young people. And importantly, the Paris rulebook was completed after 6 years of negotiation. The image on the right is the Environment Minister for Tuvalu addressing COP during the conference, making a very strong point about the way that climate change is affecting his country today. So that's the formal country negotiations. What else was promised? And most of this came in the first week, again orchestrated by the UK presidency. A very significant pledge around methane, and methane is a very important greenhouse gas. And indeed, many of the measures that can be made around managing methane can be done with effort in the shorter term. So that's a very significant announcement. A very significant announcement around global deforestation to halt and reverse. And you can see on the slide a number of the countries in the Asia Pacific region who followed this. And I think one of the key things here is that often with these things, the devil is in the detail, as we say. And so I think there's a lot of concern about what will this actually mean in different parts of the world. And again, there's a role for all of us to keep the pressure on governments to hold their commitments against deforestation. Lots of commitments around clean and affordable technology and the role that technology will need to play as we head to 1.5 degrees. And then back to coal, an alliance was set up called the Powering Past Coal Alliance, with 40 countries agreeing to be part of that. And importantly, finance being attached to recognising that countries, including countries like Indonesia and South Africa, will need significant specific finance to move their energy grids away from coal. So again, some particular timeframes mentioned there. We'll talk shortly about the the Glasgow Financial Alliance for Net Zero, GFANZ, and a number of the financial or the investor community also joined the Powering Past Coal Alliance. So again, some significant signals there. So what do all these pledges mean? Again, we'll turn back to Climate Action Tracker, who, again, from this sort of analysis, you can see that in the top part of the slide, the rate of decline in emissions that we will need to see in a very short period of time. And that trajectory is really important for us to keep in our minds. The delta between existing pledges and targets and where the Paris Agreement tells us we need to be is something in the order of 23 to 27 gigatons of carbon dioxide. But with all the recent pledges, we reduced that by about a quarter, by about 25%. And you see in the bottom part of the graph, those pledges that I just mentioned, the important role of these sectoral initiatives, how they will help us get to that total reduction. Now, we need to be careful that there's not double counting between the pledges and what's already in the country plans. But I think the message from this is, all of the sectors that we look at, business has a very significant role to play in the action that is required to meet those overall targets. So let's just look again at those country plans, what are known as the NDCs. Again, Carbon Tracker has looked at the NDCs that were presented as the again, remember when we came to Glasgow, the ambition was asked to be elevated from countries. So those greener countries are the countries of the world that increased their ambition in their country plans coming into Glasgow. Those in the red and the orange did not. And again, I think this is really important for all of us and for business operating in these countries to really engage our governments and encourage them to think about a greater level of ambition. We talk about the ambition loop between business and countries. And I think by business making bold ambitions through our own net zero pledges, etc., that in turn gives the countries confidence to make stronger regulatory and policy frameworks and ambition, which then gives business more certainty to invest. And this circular loop is really important. So let's think about the role of business in that. And then when we go back to looking at other ways that non-state actors, including business and investors, can act, the Race to Zero, which was the campaign set up alongside the official COP process to engage business, has been amazingly successful. And now we see that over 60% of the FTSE 100 has made a form of a Race to Zero commitment. Science-based targets are increasingly being used to inform business decisions. We're seeing that the International Sustainability Standards Board has been established, and this will bring important harmonisation. And business really need to take notice of this standards board to ensure that global greenhouse gas accounting methods and standards will be adhered to as this comes into force. Lots of investment through the Breakthrough Energy Catalyst and the First Mover Coalition, which is around the hard to abate sectors, aviation, shipping and steel. So companies again saying we will go first, go early and put the investment in to accelerate these new technologies. GFANZ, which we talked about, which was unlocking private finance into supporting these climate financing. And then the Net Zero Asset Owner Alliance, again, specific funds coming in to help the transition away from thermal coal assets, but also fossil fuels. So we'll see there a whole range. COP was the focus that you may have seen in the headlines was around the government negotiations. But I think what has come out of the COP26 process and those in Glasgow is a whole momentum, a whole movement to transition our economy at a rate that we haven't seen for a very long time. And we like to quote the Al Gore quote that we heard in Glasgow, which is we are trying to see the scale of the industrial revolution in the time frame of the digital revolution, and this will be the sustainability revolution. And I think that's a real message for all of us in business. Back to you, Julia.
Thank you very much, Lyndon. That was very insightful, and that is also a very good bridge to the next session that we have. And I would like to invite James Stacey. James, as we can see, financial sector is playing an increasingly important role in driving the low carbon economy transition and has been visibly active at the recent COPs. What are the key trends which were reinforced at Glasgow, and what does this mean for corporates and their relationship with the financial services sector? Over to you, James. Thank you.
Thanks, Julia, and good morning, everybody. Real pleasure to be here with you. I'm based in London at the moment, but I spent a big portion of my career working across Asia Pacific when I was previously Global Head of Sustainable Business for Standard Chartered Bank. So it's a real pleasure to be here with you today. Yeah, look, first of all, I think a big message is the financial services sector showed up at COP in a very significant way. The presence was very high. Many global financial institutions were present, were hosting events, and were very visible. And I think that visibility is captured perhaps very succinctly with the Glasgow Financial Alliance for Net Zero commitment, where we saw 40% of global assets under management by the financial services sector, a value of $130 trillion US, effectively committed to being available to finance the transition. And just to give that 130 some context, the global economy today is worth about $85 trillion US. So the 130 is a really very significant commitment from the financial services sector. And it reflects really a recognition within the sector that there is opportunity in financing the transition, that there is an industrial revolution underway now. Many of the technologies that require financing are commercially viable and competitive today. They've come down the cost curve and they make sense financially. And the sector is therefore ready, willing and keen to deploy capital into this space. Now, the Glasgow Financial Alliance wasn't something that was suddenly new from the financial services sector. And so if we move to the right-hand side of the chart here, it really reinforced action that the sector has now been taking for a while, where we've had a number of different initiatives, two on the screen here, the Net Zero Banking Alliance and the Net Zero Asset Owner Alliance. Effectively, groups of financial institutions committing that their lending or investment books will be monitored. And those organizations, those counterparties or investee organizations that sit within those portfolios, effectively tracked to determine whether or not they are transitioning to a net zero future. A range of financial institutions making these commitments. A notable one that we were very closely involved with, the JP Morgan Carbon Compass that many of you may have seen in the public domain, where the methodology was published and very transparent. So significant movement from the financial services sector, both in terms of making money available, but also tracking the money that's already been deployed to confirm that the entities that is exposed to are themselves moving in a net zero direction. Really significant implications, therefore, for all sectors across the economy that are seeking to attract capital from the financial services sector. And why is this? Why would the financial services sector be so active? And I think it comes down to economics. The sector has, through a number of different drivers, become very aware that climate change and the transition to a low carbon economy present both material financial risk and opportunity to the sector. And on this chart, we can see on the left-hand side the four major ways in which climate change shows up and creates a driver of economic impact. And then a range in the middle of different commercial and financial consequences that we are seeing now arise across different sectors and geographies, resulting from those four climate drivers. And then importantly for the financial services sector on the right-hand side, how that then shows up in financial metrics and performance within their own businesses. And it's in these KPIs where the financial services sector has now undertaken a lot of work to understand climate change and the transition, and come to some significant conclusions that there is material risk and opportunity that needs to be navigated and managed. So if we move to the next slide, I think Lyndon's presentation will have reinforced two things. Number one, that the world's governments continue to make significant steps forwards around putting in place commitments, pledges, and policies which will tackle climate change and lead to a decarbonising economy. But the second point is also important, and that's that there is still uncertainty around the speed at which this transition will play out. Of course, that makes deploying capital challenging, not quite knowing at what speed different economies will go and how quickly they will decarbonize, how different sectors will perform. And therefore, the COP meeting has reinforced the significance of the recommendations made by the Task Force for Climate-Related Financial Disclosures. That from an investor or lender perspective, you need to understand how different entities will perform financially according to these different trajectories of climate change that we could still face, and the different trajectories of decarbonisation, which will, of course, will impact different businesses and different business models. So a big takeaway, I think, for the financial services sector, but also all sectors from COP is that the case for scenario analysis and the disclosure of the output from that scenario analysis and how it's fed through into strategic planning, that case remains very, very strong. And as a result, of course, we are seeing TCFD now being mandated either through financial regulators or through government legislation in an increasing number of countries. If we move on to the next slide. And with the need to undertake that analysis, so we see the reinforcement of disclosure of the findings of that analysis. Now, one of the outcomes from COP was the International Sustainability Standards Board underneath the International Financial Reporting Standards, which effectively will harmonize and bring together a range of different ESG disclosure standards, including TCFD. That's a big development that should make the process of disclosure easier for organizations. But it's so important now because if you're a financial services company, you're increasingly facing obligations from your financial regulator to be able to articulate how you are managing climate-related financial risk and what the impact of that risk is on your business. As a result, lenders are making disclosure requirements of the counterparties that they lend to. Of course, that therefore affects all sectors across the economy. Investors are doing the same. They don't want to deploy capital into businesses that they don't understand the climate-related financial risk for. And as a result, corporates are responding, and we've seen an enormous rise in corporates wanting to evaluate these risks and prepare appropriate disclosures. The outcome from COP will simply act as an accelerator of that demand. Government's just got another step more serious around tackling climate change. They've shifted the future ratchet component of the Paris Agreement from 5-year intervals to 1-year intervals. That will increase the need for business to maintain line of sight on how the transition is changing, how it's speeding up in all likelihood, and therefore how that will affect their business. And from a financial services perspective, the desire, therefore, to see and understand what that means for the financial performance of different businesses that are being invested or lent to. If we move on to the next slide. So how is the industry responding? And we're really seeing these three trends emerge. First of all, large financial institutions setting themselves these net zero commitments for their portfolios. And therefore, essentially putting in place methodologies, KPIs, monitoring systems that enable them to track all the companies that they are deploying capital into and determine whether those companies are aligned or not with a zero emission future. Really significant implications, therefore, for all companies that are seeking to attract capital from the financial services sector. Secondly, and of course, this goes to the Glasgow Financial Alliance for Net Zero, financial institutions are setting up commercial businesses that are dedicated and focused towards deploying capital into businesses to enable and support them to make the changes that they need to in order move their business in line with the transition. And finally, and connected, of course, to that second point, the launching of new financial products, a range of different products that both incentivize and support counterparties or investees in making the transition. One of the very interesting developments here, sustainability linked lending, whereby an organization will commit to delivering performance improvement in certain climate or ESG KPIs, such as their emissions profile, and in exchange get a lower cost of capital. And that particular product we're seeing gaining real traction with the market, where there then becomes a financial case for the counterparty through the lower cost of capital to start to implement strategies that they may not otherwise have prioritized in the same way. So if we move to the next slide, just focusing in here on these net zero strategies that financial institutions are putting in place. And we're seeing this trend now across the whole breadth of the sector, whether it be pension funds and other asset owners, whether it be asset managers, or indeed the banks. Organizations wanting to understand what exactly are the benchmarks, the emissions profiles that different sectors need to be following in order to be consistent with the commitments that were made in Paris, or potentially more ambitious decarbonisation pathways. And this is not an easy exercise for institutions. It requires new data sets to be developed, data hierarchies to be established and worked out. It requires methodologies to be developed in order to understand what different sectors are going to do if they are to align with a decarbonising economy. But nevertheless, despite the challenges, we're seeing financial institutions allocate significant resources in order to understand and therefore be able to make decisions around how they allocate capital in the future on the basis of how counterparties or investee organizations benchmark against these new methodologies. Really, really important development that has significant implications for all sectors of the economy. If we move on to the next slide, please. ERM's recently launched a thought leadership paper that I think we should be able to circulate to everybody in attendance on the webinar afterwards, connecting ESG, capital markets, and the Chief Financial Officer. And this piece of research digs a little bit deeper than I'm going to go into today, into exactly how are the financial markets responding to this agenda. What are the trends that are occurring within the sector? And what does that then mean for all corporates across all sectors that need to attract capital from the financial services sector? And here we can see the same diagram on the right-hand side that I shared a moment ago. This very rapid expansion of sustainability-orientated financial products. But the very important developments here, that when we combine those products with the net zero commitments of financial institutions, we have effectively a push and a pull from the sector, affecting all businesses across all parts of the economy. And so if we move to the next slide, the same piece of thought leadership concludes really that there are 4 areas of action that all corporates would want to be taking in order to respond to these developments within the financial services sector. And these are explained in much more detail in the thought leadership paper that we will share afterwards. But essentially leveraging a structured framework to identify material ESG risks and opportunities. The TCFD offers that for climate change. The TCFD framework has the potential to be applied to other ESG issues. Integrate material ESG risks and opportunities into the corporate strategy. Really important that it is integrated into the strategy and that integration is articulated clearly to the financial services sector. Hence, ensure comprehensive disclosure and reporting that meets those stakeholder needs. Really very important now that corporates are articulate in how they are integrating these risks and opportunities into their strategy and making that very clear to the financial services sector, such that they are rated and ranked accordingly and accurately. And then, of course, taking advantage of these new financial products and ensuring that their access to and cost of capital is enhanced through the actions that are being taken. So, Julia, I think that's my final slide, and I'll hand back to you.
Thank you very much, James. A few very important considerations, which we will pick up at the end of today's session. But with all of that, and coming back from the global policy, non-state and financial sector trends, I would like to bring us back to the Asia-Pacific region and invite Robin Kenish. Robin, what do you think would be the most immediate impact on businesses in our Asia-Pacific region? And which sectors do you think would be the most impacted, and what we should start doing already now?
Great, thanks very much, Julia, and good afternoon, everybody, and good morning to anybody calling in from Europe. It's a really good question, that, Julia. I mean, as Lyndon mentioned, over 50% of global greenhouse gas emissions are coming from the Asia-Pacific region. And of that, a huge amount is from energy production and energy use, particularly in heavy industries and transport, for example. So obviously, moving towards zero carbon fuels, further development of renewable energy, access to things like hydrogen, for example, will be a great way forward for us. In the next couple of slides, we've got some tips and sort of suggestions for everybody out there for businesses to decarbonize. But before we do that, we've got a polling question. So we've got about 30 seconds to answer the polling question. So having seen the key headlines that came out of COP26 and the results, what do you yourselves think would be the biggest implication for your business? So is it around a net zero decarbonisation strategy, scope 3 greenhouse gas emissions accounting, product carbon footprint, decisions based on business transformation or new products, new climate disclosure requirements in your particular country or location, scrutiny of climate management plans, social impact of transition, or low carbon tech investments? So interesting to see what our audience feels are some of the key implications for your business. So we give that a couple of seconds for the results to come through. Yeah, we can see here quite clearly, I think everybody is quite aligned here that we've got net zero carbonisation strategies. And I think very interestingly, there's quite a lot of people that have chosen around decisions on business transformation and new products, because that's something that's very particular about some of the sectors, is that there's a huge drive to maximise the opportunities coming out of climate change in terms of clean technology, research and development and innovation. And we'll cover a bit of that in some of the slides that we'll go through in a moment. So if we can go on to the next slide. So we've heard from Lyndon and James about some of the implications coming out of COP26. So what would this mean, particularly for businesses in the APAC region? We can expect to see that there's going to be some tightening of regulations in most jurisdictions, as because many of the APAC countries have issued revised NDCs. Some of these include much more ambitious targets. So consequently, we expect that there's going to be some kind of tightening of regulations. This could be through the introduction, for example, of carbon pricing mechanisms, or it could additionally be subsidies to clean tech innovation, for example. James has talked about the increasing requirements for financial disclosure. And I have another slide which we'll go through in a moment, which talks about what's happening in the APAC region in this regard. There's intensified scrutiny now from investors and very much a shift to funding companies that have clear net zero plans in place or have committed to some form of transition plan to maybe, for example, meeting the Paris goals by 2030. Expectations from customers are also becoming much more important. There's a lot of pressure, particularly on Asia-Pacific customers, Asia-Pacific manufacturers, for example, who have customers in Europe or the States, to disclose what their scope 1, 2, 3 emissions are, and then to set targets for these. The Science Based Targets Initiative, for example, has had a 130% increase in companies signing up to the SBTIs in the last 5 years. And they've issued an updated guidance quite recently, and particularly an updated guidance for SMEs as well. So that's all helping people not only determine what their scope 1, 2, 3 emissions are, but also get these verified and have plans in place. These are some of the things that we consider to be some of the essential business shifts. But what we're noting is there's a lot more focus on not just setting these targets, but actually delivering the actions. People want to see what is going to happen over the next 5-10 years, for example. So if we move on to the next slide, we've got a summary here of around which jurisdictions in the APAC region have introduced new climate disclosure requirements. So, for example, in Hong Kong, last year they introduced the mandatory climate-related risk disclosures as part of the Hong Kong Stock Exchange requirements in July 2020. And they're moving forward now to full TCFD alignment by 2025. Similarly, in New Zealand, there's now mandatory reporting of climate risks in the financial sector. India is moving towards alignment with TCFD, and the Singapore authority is the same situation, that they're again aligning reporting approaches to the TCFD. Japan, interestingly, is one of the largest participants to the TCFD. The bulk of Asia-Pacific TCFD members come from Japan. And again, that's because TCFD is considered to be the right framework to adopt for analysing what your climate risks and your climate opportunities are, and then disclosing these in sustainability reports, for example. So if we go on to specific industries, some of the industries we have in Asia-Pacific are what we call the harder to abate sectors, particularly around heavy industry, around metals and mining, for example. Mining itself has major impacts on 11 of the different SDGs. So it's been in the spotlight for some time. The International Council on Metals and Minerals has issued principles around ESG expectations. And more significantly, I think, for consideration is that going forward, all the new technologies that we'll need to go to commercial scale, including the development of wind, solar, geothermal, and in particular energy storage, will require minerals and metals to be mined. The estimates are over 3 billion tons of many of these particular ingredients. So there is a very strong future for metals and mining, and something that needs to be taken into account going forwards when we're looking for net zero solutions. So some of our key global players in metals and mining have taken some key actions. For example, in the APAC region, Tata Steel have committed to a sustainable steel program, and they're looking at research and development around producing carbon neutral steel. In the post-COP26 landscape, the Glasgow Breakthrough Agenda highlighted that near zero emission steel needs to be the preferred choice in global markets going forward, and they want to see this happening in every region by 2030. So some of the largest steel producers in Europe, the UK and Germany, for example, and India have pledged to achieve net zero production of major heavy industry issues such as construction, steel and concrete going forwards. So up to 20% of global steel production is now committed to net zero by 2050. If we move on to the energy sector, the energy sector has been in the spotlight for some time because electricity utilities are responsible for around 40% of global greenhouse gas emissions. The speed at which we decarbonize our energy sector is going to be crucial for us to maintain global temperature rises to under 2 degrees C. In the Paris Agreement, we had many countries in the Asia-Pacific region committing to actually expanding coal, particularly China, India, Indonesia, and the Philippines. A lot of these plans have now changed, as we know, and as Lyndon talked about. And we've seen specific companies in our APAC region taking strong action with this regard. If we look at Ørsted is now one of the world's largest renewable energy providers, and they now have in development over 2 gigawatts of renewable energy in Taiwan. They've transformed their business from fossil fuel based to renewables within the last 10 years. Closer to home, Sembcorp and CLP have all committed to TCFD aligned scenario analysis and announced either carbon neutral or net zero targets by 2050. And then the Glasgow Breakthrough Agenda again was focused on power and the importance of rapidly developing and scaling up clean energy solutions. This included over 40 countries pledging to phase out coal between 2030 and 2040. And that included some major players such as Indonesia, admittedly with caveats around the availability of finance and technology, but it's a really good step forward if we're to phase out coal in the near term. One thing that's really important to talk about is the opportunities that the net zero transition of the energy sector provides, because this means we've got investment now that needs to go to scale to help us develop green hydrogen, for example, to replace fossil fuels for power generation, provide investments in energy storage solutions, particularly so that we can access and use more renewable energy in the grids. Other sectors that are coming into the spotlight include agriculture, food and beverage. The percentage of global greenhouse gas emissions from this sector, it depends how it's looked at, but it's around 20% to 25%. So it's a significant contribution. We've got some industry guidelines now that have been coming out, particularly from the EU, such as the Farm to Fork Net Zero Handbook, which covers about how to prepare, package, distribute, store, and send to customers and consumers in a manner that can bring the industry towards net zero. And again, we've got some companies taking leading action. In this part of the world, in the APAC region, we've got Thai Beverage, who have committed to TCFD disclosure. They've incorporated climate into their strategy and targets and are aggressively addressing greenhouse gas emissions and climate adaptation. Similarly, Tata Consumer Products have committed to net zero and aggressively again reducing their greenhouse gas emissions by 35% by 2030. Food and beverage and agriculture was highlighted again in the Glasgow Breakthrough Agendas, and the focus of that discussion was all around making agriculture climate resilient, making it sustainable, and making it an attractive option for farmers everywhere. So moving on to the last sector in our spotlight, we have a great story, I think, to tell around the tech sector. Obviously, the expansion of the tech sector has been really rapid over the last couple of years, particularly around things like data centers. The sector has introduced all sorts of measures to improve the power usage effectiveness of data centers. China is building data centers at a very rapid rate, and they've introduced new rules around improving the PUE of the data centers so that they use less energy and secure more energy from renewable sources. Some of the world's leading players in the technology sector are really driving the decarbonisation. Apple, Amazon, Google, and Microsoft all committing to net zero plans. And not only that, they're also talking about removing all the carbon that they may have produced since the 70s, for example. The sector is probably one of the most aligned to climate change. We've got over 40% of the sector by revenue is committed to race to zero, which is really excellent. And again, I think on the opportunity side, the significant amount of investment going into low carbon solutions, research and development and technology. The tech sector is now becoming a significant power producer in the renewable side, and they have the expertise to accelerate our needed zero carbon economy transformation. So some good news going forward from the tech sector. So over to you, Julia.
Thank you very much, Robin. A lot of exciting examples across Asia and the Pacific, and I can see that more is coming in the coming years. Before we wrap up, I would like to encourage all the participants to share more of your questions in the Q&A box at the bottom of your screen. We will pick them up in the coming Q&A session, or if we don't have time for those, we will respond to them later after this session. So today we've heard already about the COP26 key highlights from Lyndon, and it's unequivocally that climate agenda will be picked up by the financial sector, by regulators, by governments, unavoidably translated into climate actions by corporates. And for our clients, we have prepared a few tips on what you could start doing already now, regardless of your sector, starting from setting your net zero targets, also backed up by robust action plans. Don't forget that whatever you're doing in terms of greenhouse gas emission reduction or adaptation should also should not have adverse effect on society and environment when we talk about just transition. Assessment and disclosure of climate-related risks and opportunities is another big topic, and it's becoming increasingly mandatory in our region as well, which is also linked to general transparency and accountability, where climate change and your GHG data is becoming just part of a bigger monitoring and evaluation system across your different ESG topics. And of course, if you would like to succeed in the climate action, you cannot do it alone. You really need to collaborate with other stakeholders across your value chain to address your Scope 3 emissions and overall business transformation, and really find leaders within your internal teams, incapacitate them, and set up internal governance processes and tools internally for climate. I would like to thank all our panelists today and welcome them back to the final question and answer session. And we will start with Lyndon and the general question on what to expect from the upcoming COP27 that is happening in Egypt next year.
Thanks, Julia. Well, I think, James already mentioned that one of the decisions that came out of Glasgow was for countries to come back within a year with greater ambition around their NDCs. Now, exactly what that means is still being debated, but I think it's an important signal and expectation that we see that. And I think, therefore, for business, there will be also pressure for business to demonstrate greater ambition alongside that. I think we'll also see a lot of discussion around finance, both in terms of broad climate finance coming from the public and private sector, different types of financial instruments, and also more money directly aimed at adaptation. I think we will also see progress around loss and damage due to the pressures on that. And an increasing with COP15 on nature coming up, I think we'll see a lot more around the connection between nature, people, and climate and biodiversity. So they're probably some of the headlines at this early stage of planning for COP27.
Thank you very much, Lyndon. Next question I would like to address to James. There was a question from the floor to elaborate a little bit more on the Glasgow Financial Alliance for Net Zero and what it means for developing countries in Asia Pacific.
Yeah, it's a great question. Well, it should lead to quite significant flows of capital into emerging economies and APAC. There already are significant flows, of course, and we're seeing that at the moment right across Asia Pacific in terms of the rapid expansion of renewable energy, for example. And a lot of the capital that's flowing into those projects is from all over the world rather than local capital. So yeah, there's no question that 130 trillion that has been committed, if we like, from the financial services sector, a significant proportion of that will be coming into these markets.
Excellent. Thank you very much, James. And since I have you, there was another question on sustainability-linked finance and what type of finance dominates the market. Is it green, social, sustainability-linked? And
yeah, I think it's a really good question, this one. Yeah. Really good question. And obviously we have a snapshot in time in the graph that I shared. But not all of those different financial products have been available to the market for the same period of time. So the green bonds and the social bonds that you can see that are the largest element have been around the longest. So those are more mature and established markets. The sustainability linked bonds, much more recent. and therefore just don't have the same scale in the market yet. But, you know, where will it all go? And certainly we are seeing significant appetite for the sustainability linked products, whether it be bonds or loans, because of the ratchet that's built into the facility, whereby a better performance around the ESG areas of interest that the bond focuses on leads to a lower cost of capital, effectively reduced interest rates. So expectation would be that over time, we see the proportion of sustainability linked products grow, and maybe the ones that were more typical of the past, that they'll see a reducing market share.
All right, thank you very much, James. Next question I would like to address to Robin, and it's about methane pledge and what would be potential implications for companies in Asia and the Pacific around methane emission reductions.
Well, it was really interesting. Lyndon talked about the 100 countries that have signed up to reducing their methane emissions 30% from 2020 to 2030. In the APAC region, we've got some signatories to that. So Indonesia, Vietnam, Singapore, Philippines, for example. But some of the larger emitters of methane, in particular China and India, haven't signed up to that. When we look at China, for example, you know, it's the world's largest emitter of methane, and about 41% of that comes from coal mining. So China's plans on phasing out coal and coal mining in particular are going to be quite crucial to reducing that target. But when we look across the whole of Asia, waste still contributes to a huge amount of methane that's emitted to the environment. So that does mean that there's opportunities there in the waste sector for further investment, to clean up landfills, to even capture the methane for energy usage. So there's also business opportunities, I think, there, and finance opportunities to look at methane reduction in that particular sector.
Excellent. Thank you very much, Robin. We have only 1 minute left, and maybe we can pick up just one more question from the floor, and I would like to address it to Robin. Any key takeaways for oil and gas sector for Asia and the Pacific, which plays a significant role here in the region?
Well, you've given me the easy one, Julia. I think obviously, you know, the focus on emission reduction and emission abatements, particularly CO2 and methane, are going to be critical going forward. Having a robust transition strategy in place for oil and gas companies is going to be key. And then I think, you know, in certain situations, the ability to utilize CCUS is going to be vital in some circumstances. I think everybody knows it's not necessarily going to be the silver bullet, but it's something that it could work in certain situations. So we can see that that's something going forward.
All right, thank you very much, Robin. And I would like to thank once again everyone who participated in our session today and our distinguished panelists. And don't forget, when you log off, please fill up a short survey. That would be definitely helpful for us for the future events. And please follow up for new upcoming ERM webinars. We'll run a series of net zero webinars coming shortly for various sectors in APAC, and obviously other sustainability and climate related activities. Thank you very much and have a lovely afternoon.
Thanks very much, everybody.